And all right, welcome everybody. It's January 18th. Made this as a beginner type option Zoom meeting, but if there's any questions that come in that are a little bit more advanced, I'll try to bring it in a more beginner friendly mode and then also answer the question as well. So just leave it open floor. As you guys have questions, either write it on the chat or just say them out. Another one coming in. Any questions? Feel free. Open mic right now.
No one wants to talk. So in TOS, when you're looking at, see, I guess I got myself confused because I had a couple open at a time, a couple spreads sold.
Okay.
How am I going to look at the profit in real time for an individual spread? Because I can look at my overall liquidity in my
Yeah.
account and see if it's going up and down, but like I had like a credit and a debit open today, and I needed to be able to see what was going on with what.
Right.
Am I just looking in the monitor tab and like then I have like a credit and a debit? Do I just subtract those two from each other?
Pretty much. You could actually manually calculate it out where if you see what you initially sold your put and bought your put in the spread, and then see what the new values are at the current prices, you can just simply subtract it. Sometimes I actually do that because sometimes I forget exactly what I sold them at. It's the individual options. So I'll just take the
Okay.
sold, I'll take the sold put, take the bought put, subtract the two, and that's the credit that I took in when I started the trade. And then you can look at the current values of both of those options, subtract those, and then you essentially see the difference between the two.
Is there an easier way to do that?
In the monitor tab, I'll show you a few of these different settings here. And I don't use the monitor tab much on desktop anymore because I can't even use it on real life because school doesn't let me. So I don't really have any positions. I do have the SPY position as a paper trade. So if you click on the gear icon right here, you can
Yep.
customize the columns into what you're looking for. Um, the mark price is probably enough, to be honest. I think it's already set up where I can figure it out from there. But
Oh, I percentage change. That might be helpful. Then I can see if
yeah,
it went.
yeah, percent change on the actual position. I think, yeah, it's showing the percent change. That might be for the day, possibly. P&L open is probably the most straightforward one because then you can see this P&L open. If you see a parentheses here, it means you're down on it. If you see, and the market's closed, so that's why it's coming up with your numbers right now. But during the market open, you'll see the numbers change in real time here. And I
Okay,
also have,
yeah, I
I also
forgot
have
about
PL
being able to
day.
do that.
Yeah, and I also have PL per day, so you can see what's happening in that particular day. So you can click that gear icon, and then PNL open, PNL day will be two to definitely add on there. And there's a
Okay.
lot in here. Um, I really don't touch almost any of these to be honest, but that's how you find your profits.
Okay.
It would help. It would also helpful to have your BP effects there, so you can see how much buying power each position's taking up as you do them. So,
Okay.
like this is my paper trade account, but cash and sweeps 200 grand, net lick, for us the same number, and then buying power. You can see these little parentheses means it's using up that much buying power. So with these two paper trades I have on now, it's using up 1,000 plus 500. Down here is the total 1,500. Yep.
Okay.
Yep. Good questions.
Thank you.
No problem. Got an open mic, ask questions, and we'll answer them as they come in. Don't be shy. I'm here for your help.
All right. Hi, Lance.
Hey, Chris.
I have a question for today's trade about with the oil, I believe, that you posted.
Okay.
Yeah, so I'm trying to understand futures. And I know I was reading, I'm going through your strategy guide, and I was reading your futures information that you had. But for today's trade, how much are we risking And I mean, how much could we lose if it goes against us? I'm just trying to understand how that was set up.
Okay,
a
I'm
little
gonna
bit more.
post it on the Thinkorswim, so you'd see the numbers here. Um, well, here it is currently. I'll just show you what it is. So
Yeah.
CL trade here. The price was around 73 at the time. I sold 2 puts at 53. Those are naked puts. And then I bought a put debit spread. So I bought the 66 and sold the 65. Let's just go over the profits real quick. So if you sold the 253s, theoretically, if that goes to expiration worthless, you would keep the full premium you took in. And I took in 0.38 for that. CL has a 100 multiplier, so it's 0.38 times 100. It would be 300. Did I do the numbers right? It's $380 for one of them. Well, that's 1,000 actually. Wait, 0.38 times 1,000. Yeah, it's 1,000. Sorry, 1,000 multiplier will be 380 times the 2 that I sold. So that'll be 760 in the actual naked puts. For the put debit spread, you're paying a debit. You can do 2.07 minus 1.82, and that would be 0.25. So I spent $250 for this mini hedge, and then I sold the 2 nakeds. Now, if the market if oil went to 0 or negative, you would be down a ton of money based on the notional values of those contracts. I wouldn't get anywhere near there. So you could have a set stop loss based on 2 different factors for the safeguard is I usually look at the total profit if I got the max profit and use that as a stop loss. Does that make sense?
Yes. So yeah, so we're going to use our max profit then as a stop loss on
Yeah.
that. Okay.
So
Yeah.
let's figure out the max profit. It's 760 that we took in on the nakeds. You can make $1,000 on the put debit spread because it's a one with and 1 times 1,000 is $1,000.
Okay.
If one of you guys could mute your mic, it's having a little static, please. So that's 1760. Then if I take this, that was 25 or $250. So if I subtract 250, I'm looking at about $1,500 or so would be the max profit. And the way to make your max profit is if it ends between 65 and 53. So if it ends at like 64.99, that would be the ideal situation because then the naked puts would still be worthless. You wouldn't be really challenged on it, and you would make the max profit on the put debit spread. So what you could do is look at the P&L open percent is one way. You could set it up as a dollar amount if you want to. And click the gear icon on Tasty. I think I'll have to double check this. I think there's a way to do it. Or you can just calculate out the percent it would be based on what I took in. And then you can just close it out. On my phone, I show the profit and loss based on dollar amounts. So that's another way you could go about it. Does that all make sense? All right, Chris, you
Yeah.
gotta,
So I'm sorry. So what would you put your stop loss at on this trade?
it would be when the position was at the $1,500 loss, because that would be the max profit.
Okay.
And it's not coming up on the desktop, but on my phone it shows the dollar amount that I'm down. You could also
Okay.
make it simpler if you want and make it a percent of your P&L. Like if you see a negative 100% or negative 200%, you could do it that way as well.
Okay. All right. Gotcha.
Good questions though.
So I'm sorry, just to kind of dig into a little bit more. So in this situation, what would, with the $1,500 max loss, like what would the stop loss be at? Like what price point?
We wouldn't necessarily know that because it would depend on the time that you're in the trade, the days that are left, your IV. There's a lot of factors in that. So it's not going to be a set price where that actually happens.
Gotcha.
If we got down really quickly, like we got down to like the high 50s tomorrow, then it would be at a really big loss for the short term because the naked puts would be losing a lot more in value than the put debit spread is.
Okay,
It really depends on the time in the trade.
gotcha. Okay.
There's a way to do this. See if I remember. You could actually
Yeah.
on the positions and then see the analysis of it.
Mhm.
Yeah, like the longer you're in it, the safer it becomes, right? It's basically
Yeah.
Mm,
it's,
okay.
the worst case is it drops really fast as soon as you enter, and then you're just like, ah. So
Yeah. The put debit spread will take a while for it to actually make the profit. I'm gonna mute Paul. I think it was him. It takes a while for that put debit spread to make the full profit because there's still time in the trade. So you need that data to actually pretty much go the other way, and you need the time to work in your favor on the put debit spread part. The naked puts, on the other hand, you want it to decay and just stay where you are. So they kind of work in tandem together. What's interesting about the trade is when you first start the trade, you don't want this to drop right away. Because again, those naked puts could
Mhm.
go up more than the put debit spread goes the other way. But as you get closer to expiration, the put debit spread could possibly gain more value, especially if you're lower than that sold put of the put debit spread. So if I was close to the 65 strike, then these will actually gain in value per day because it's getting closer to that expiration date and then get the possible full profit.
Okay.
You can also look on the thread for the safeguard trade I did on soybeans.
Okay.
I closed out the nakeds before. I was actually at a loss. So I was down quite a bit on the nakeds there. I left the put debit spread on though. And then I
Mm.
waited near expiration. I closed it today. So let's see, ZC, look it up. Or ZS. It was really close to full profit already. I mean, it's not coming up there, but it was pretty much the max profit was around $500 minus the debit that I paid. And I paid a debit of about 100 or so. So it hit really close to the max profit. We're within like $10 or so with only about 9 days left. So I just closed it out.
Okay.
Ideally, and that's a good point too. If you're on your put debit spreads and there's only a few days left with a profit on them, you're going to want to close those out because if you're below that sold put, you could theoretically get assigned on it, and that could be a little scary, especially if you're having to manage it and like,
Mhm.
that gap afterwards and whatnot. So I
Yeah.
tend to close these 3 to 5 days or so before the expiration date. Yeah. And Chris, feel free to send me any messages on Discord too, if we could elaborate more on all that.
Okay, great. Thank you. Appreciate it.
No problem. Okay, questions up in the floor for any questions you have.
Can you get assigned on the 0DT SPX trades then?
Good question. No, SPX is cash settled, meaning it's
Okay.
going to take the net credit or debit in the end of the day.
Okay.
So if you did it with SPY, you could get early assigned, and that could be very dangerous because if you got assigned in your sold option, like say you sold a put and it gets assigned and it keeps dropping, you would be down quite a bit more than the SPX version if you actually just waited for the cash settlement. That's
Yeah, so the
one of
most
the
you would be out
benefits.
is like whatever it says, the max loss says $950 or something like that, which would obviously be really sucky, but
Yeah, that would be the max losses. I don't think there's a possible way to get more than that on SPX because it's
okay.
cash settled. If it was SPY, you could theoretically lose more, especially if you got assigns like in the middle of the day and stuff. So that's one of the
Okay.
benefits for SPX, and also it is better tax treatment. So you get 60/40 tax treatment. You could look up all that, talk
Yeah,
PA and all that stuff. But
I've heard that before.
it's a fine balance. SPY, you pay a little less in commissions than SPX. And also SPY, you could do one widths. So you could go one strike away, like 418, 417. SPX,
Okay.
SPX, the lowest you can do is a 5 width. So
Is that
that
what we
is,
signed that petition for, to try and get them to make
yeah,
more with? Okay,
yeah. I doubt it's gonna go through. It might go through if the SIBO wants to actually make more in commissions. They might have more people doing less whip on SPX. However, there's not much demand for it. And there's not much volume open interest possibly if you're one strike away, because if you're looking at say 47-12 and 47-13, it's really negligible difference there. But if you looked at 4-12, 4-13, that's a bigger percent jump for the one strike.
Yeah.
I don't think it's gonna go through, but never know. We'll see what happens. I don't think I would even take advantage of it, to be honest, if it did happen. Good questions. We actually looked about a year and a half ago. We looked into SPX versus SPY on the zero DTEs because I actually was starting with SPYs for a while. I was doing 5 WIF on zero DTE. We never got assigned early. You know, we get out early anyway at the 3x stop, so there was never going to be an issue there. So if people are interested in it, you could still do SPY if you want to. I know some traders do 1 WIF SPY, and they do a lot of contracts of it. A possible benefit of that is if you go on Tasty Trade, if you do more than 10 contracts, they don't charge you for the extra contracts. And was it $1 per SPY? So it'd be $10 for the sold, $10 for the bought. You're looking at $20, but you could do 50, 20, 1,000 contracts if you wanted to. And so the commissions will be a lower percentage that way than if you did a bunch of SPX. But we're looking at really, really big accounts there. So it probably won't really factor into pretty much anybody here. Any other open questions?
So are you letting us know every time you have like a stop loss you hit, things like that, when you get out of trades?
Yeah. On the closed trades, I'll post it there. For the stock-based ones. For the futures ones, I'll post it on the thread. So on this individual thread trade that I do. Read through the strategy guides in each one. I'm pretty sure everyone I've showed the stop loss or where I'm gonna get out anyway. For the strangles, it's usually 3x. So for the MES strangle, and we'll do one of those tomorrow. Tend to take in about $100 or so. I would stop out at a $200 loss there. It could be a 3x. I might have wrote 2x or 3x. I gotta look back at it. Usually I let it go to a 3x stop. So if you take in 100, if you're down to minus 300, I would close it out at a $200 loss because you took in 100 first. Safeguard we just went over. That was the max of the trap. So whatever your trap profit is, that'll be the same as your stop loss. And those are pretty much it for futures, actually. It's covered strangled and willing to actually get assigned on it.
So like that old trade, you said basically stop out at when you get hit break even, right?
When you not break even, when you're actually down quite a bit on it. So you find the max profit is about $1,500 if you hit the trap. So we're gonna do the exact opposite. We're gonna go negative 1,500, and that's where I'd stop out on it.
Gotcha. So what percentage of your portfolio are you putting in something like that oil trade we were just talking about?
Yeah, so I have a $60,000 account, and that oil trade's a little over $3,000 in initial buying power. And I'm gonna double that. So it's about $6,000 total. Looking at about 10% of my net liquidating value on that. But the stop loss is about 1,500. So I'll just show the numbers real quick. Fix that out. Yeah, family. All right, so if I'm taking in, sorry, if I'm willing to lose about $1,500 divided by the full account of 60,000, I'm willing to lose 2.5% of my net lick on that particular trade. And that's a good, reasonable ballpark. I'm willing to go up to 3% loss on a net lick on one trade. I wouldn't recommend going much higher than that because you don't want one individual trade to really hurt your account much. If you have a smaller account, you can consider a little bit higher, but at least $20,000-$30,000 account, I would probably limit it to max 5% loss of any one trade. And to be even safer, you can go 2 or 3% on it. that all make sense?
So you did two of those trades in your account, is that what you're saying?
I just did one. It's I
One.
sold two. It's one strategy of the safeguard. I sold two naked puts and bought
Right.
one put debit spread. So it's really one tranche, so to speak. It's one position.
And don't you want the price to come below the debit spread, put spread, because that way you get the maximum profit on that?
Yes, you want it to, and you also want it to happen near the expiration date. Ideally, you don't want a big drop early on in the trade because you're selling two naked puts, and that could drop quite a bit, and your put debit spread won't gain that much early on. It takes a while for it to actually hit the max profit. So ideally, the stock stays pretty close to where it is, even goes up a bit, and let's say your trading plan says to close out at 90% profit on the naked puts. So let's say that happens relatively quickly. You keep the put debit spread on as that mini hedge, and then the market tumbles, assuming you have no other positions on it. That would be the absolute best case scenario there, because then you would get your profit on the nakeds, and you also get your max profit on the put debit spread. Pretty rare that happens though. So in general, when you're doing the naked puts, it takes about 75, 80% of the time in the trade to actually hit your 90% profit target. So for the ES strangles that are around 120 days out, the average is about 93 days in the trade to get your profit on the naked puts. There's a bit of variability there within about 20 days or so, up or down. Sometimes when the market was bullish, we were getting out at about 60 days or so. And then sometimes if the market drops, it'll take longer than that.
So what percentage of return are you looking for on that oil trade?
The current one?
Yes.
Well, I just did it today. It's pretty much break even right now.
So basically what I'm saying is what are you looking for?
Okay. I'll share the screen again. So, and I posted it on the Discord exactly where I'm looking to close it. So on the short puts, I took in $38. I'm going to close those nakeds around 90% profit in most cases, because I'm not going to say every case because I actually just closed an earlier one much quicker than that today. But I'm assuming I'm going to close those at around 0.03 or so. So we're looking at 38 minus 3, 35. So looking at about $350 or so per naked. So I'm trying to get about $700 total on the naked puts. And then if the put debit spread expires worthless, which is the likely scenario, I'll be down another $250 on that because that's what I paid for it. So looking at about a $450 gain on that trade. If the put debit spread hits though, you add 1,000 to that because the width of the spread is 1 times 1,000.
So you divide that number by the 6,000 you have
Yes.
into it?
Yeah, and then divide by
to get your
6,000.
return? Okay.
Yeah, so if you divide by 6,000, you're looking at 7.5%. And I did the trade 90 days out. The naked puts on average would close around 60, 65-ish days. So maybe about 2 months or so. If I get 7.5% in 2 months, and remember this factors in, wait, it's a little less. Yeah, it factored in the debit. So it factored in the put debit spread as well. If I get 7.5% in about 2 months, 3-4% a month or so, and that'll be a good trade in the end. This is also off a 0.05 delta. So that 53 naked is really far out of the money compared to the current price of 73. Good questions. Double check on the Discord so you can see exactly the numbers. Pretty much every time when I do a trade, I'll show what the profit is, where I'm looking to close it, what the percent would be, and then also if the put debit spread hits the max profit, what the percent would be there as well. I like to look at the math too, just not only for my sake, but for everybody else. open questions. As they come, I'll answer. Ed, Rick, Steve, two Ricks, any questions? All
When
right,
do you use an iron condor versus the debit credit?
good question. You mean instead of the call credit spread and put credit spread?
Yeah, that's what I mean.
All right. So just looking at, let's look at SPX charts. Most of the time, if it's trending one way, I like to sell the other way. Typically for that day, I usually believe in momentum continuing in that same direction. So let's just go to say a 5-day chart or so. You can see quite a bit of gaps in the last few days. So today it gapped up from the close the day before. So the market was bullish because of this gap up. And then I sold the put credit spread, right? In this one, the market gapped down. So it's a bearish market. And then I went the other way. I went call credit spread. If you don't see a big gap, if it, like, let's say today or tomorrow opens like around here somewhere, then, the futures market will show it's maybe down 0.05% or so. At that point, I would look most likely at iron condors. That's the basics of what I look for. It's not really overthinking it too much on those
So you
areas.
think that iron condor more because it's going to be consolidating?
Yes, if it opens and stays near there, that's why I wait about 30 minutes after the open. If it stays close to where the previous day was, and then I'll look to sell an iron condor, especially if I could sell it near the low of the previous day. Like if I could sell a put credit spread down here, and then a call side, like here's the high in the last few days. If I could sell a call credit spread above that, then it's a pretty good trade because it could stay range bound. And right now with the VIX relatively low, you usually have to wait until expiration and just let it expire worthless. But when the VIX is higher, I'll look into closing them out even earlier. So a lot of trades when the VIX was around 18 to 20, I would close them by lunchtime most of the time, just to get out of the risk. And I personally am okay if around 1.5%, 2% or so on the trade itself.
Okay. But
Do
if
you
I
know how
know
to?
if I feel like it's going to be ranging for a while, that's where I would do an iron condor.
Yeah. Do you know how
Okay.
to do the ballpark math in your head on the returns?
I think you've told me, but like if you could refresh my memory, I'll take another
Right.
note right now on this.
So pretty straightforward. If I'm taking in, say, $40 on my whatever iron condor work call, doesn't matter. Let's say I take in $40. I'm gonna subtract. Actually, it doesn't matter. Let's say I took in $40 on just a call credit spread by itself. The commissions on that are about $5 or so. So I'm gonna subtract 5 from it. You're looking at about $35 total. And then let's say it just expires worthless. You would have 35 over 1,000. That's 3.5% for that trade. Okay. That's assuming you didn't close it out.
Okay.
But let's say the VIX was a little bit higher. You want to get out and take your profits early. Let's say you started at 0.4, you took in $40. Let's say that you could buy it back at say $15 or so. You're at 25. Subtract 10 in commissions. You actually have to pay commissions on the close as well as the open. In that case, you'd be at $15. That's 1.5%. You're dividing by 1,000.
Okay.
Yeah, the number's right. For Iron Condor, you have to double that because you're doing 2 separate legs. So the commissions are double on that. You subtract $10 pretty much. So
All right.
once you get the hang of it and you do them enough, you'll pretty much know in your head. Essentially, whatever your initial premium is, in fact, $5 on just one leg, and then that's your percent. Just move the decimal point 2 places, and that's what your percent will be. So it's pretty straightforward math if you're doing $1,000 on the trade, because you just move your decimal point over.
And the later in the day you start these, the less time you're going to have theta working on them, so you may just not achieve as much profit on it, basically.
Everything else being equal, yes. So if you sold the exact same delta, sure. Some people get in later in the day. They might have to go a little higher delta, so a little closer to the money, and you can still get good returns there. But you got to be pretty active in the market to see if you're willing to do that, and also watch it carefully. But yeah, in general, the more theta decay happens, the longer in the trade. So that's why I don't want to necessarily start right at the open. I want to see if the trend in the futures continue or not. So, if the market gaps up another 0.5% or so tomorrow, I want to see is it going to stay over there or not. You also want to look at economic events. If you go to forexfactory.com, I'll post it on the chat. So forexfactory.com shows the news events like Fed meetings and whatnot.
I think we have news tomorrow.
There's always news, right? Seems like it.
I mean, I think there was something that I thought would move. Let's see.
I'm looking now too. We only have
Consumer sentiment and home sales at 10 o'clock Eastern.
Yeah,
So maybe.
it's not usually a dramatic move on
Yeah.
those, unless there's a very different number than it is expected to be. The main things to look for are CPI days, consumer price index. You want to look at Fed meetings, obviously. Most of the Fed meetings I wouldn't even touch, to be honest. You could try it on paper just to see, but you could enter a trade on a Fed meeting day. The first few hours, pretty much nothing happens. It seems like the theta decay is just waiting for the meeting. And then when the meeting happens, it moves a lot. So I would just stay away completely on the Fed meetings. I think in 2002, looked at the data for 0DTE, we doubled our money that year, but it could have been even bigger if I just didn't do Fed meeting days. Like it could have been almost 3x your money. Those Fed meeting days were a lot of stop outs. So yeah, paper trade that at minimum. And if you're doing certain allocations, if you're doing say $5,000 in 0DTE, maybe just do 1,000 on a Fed day with a tight stop and make sure the stops are in case it goes
Okay.
against. But I wouldn't bother. There's so many days already. Occasional day with a Fed meeting, you could take a break.
I mean,
Okay.
on news day, I might do it until the news if it's like at 1 o'clock and then dump it. I mean, if it's because you tend to have more suppressed action prior to, until the news.
Yeah,
I mean, that would make sense to me.
yeah, that makes sense. Sometimes the news comes like right at 9 Central Standard Time. You might want to wait a few minutes after the news comes out too. That's
Yeah.
just to stop the big moves up and down. Some people play those trades though, where they play earnings trades where they purposely sell into the earnings, and then after earnings, the IV or implied volatility drops dramatically, and they get out right away. I used to do a few of those, but it's not worth the risk in my view because it can move very quick, and even if you're really far out of the money, it's probably not worth it. Although occasional quick credit spreads, I will do that just because I'm doing one every day. It's hard to find positions every day where you don't have earnings coming up for some stocks. So
Yeah.
it's not necessarily the end of the world when that happens either, because the IV will drop a lot. You need the market to have really, really good, way better than expected or way worse than expected earnings for the price to actually move dramatically. So I'll occasionally still stay into earnings on these. Good questions. All right, we got about 3 minutes left or so. Any other quick questions I could answer?
So you use the term net liquidity quite a bit. Is that just if you were to sell your account right now, what the total value would be?
Yeah. So net liquidating value is the value would be if you're at, I think, the mark price or it's probably the mid price of all of your positions. If you just closed out every single one of those and you're in all cash. So you're literally liquidating it out where you could take out the money. So that's why it moves quite a bit from day to day. That doesn't necessarily mean it's good or bad. What I look for in futures is the realized trades and what I'm actually making or losing on each individual trade, because that will tie into the net lick over time. I am still tracking that link though.
Is there a definition for buying power?
It's a little, I'm not gonna be able to answer this in a few minutes. Buying power, pretty more straightforward for stocks. So if you have a $10,000 account, you do a 5-width spread, that's $500 in your buying power. It pretty much is the same as your net lick anyway. For futures, you want to look at your option buying power because that will show pretty much how much you're able to trade with. And I want to make sure my option buying power is very close to 50%. Just you have a lot of wiggle room there. I wouldn't overthink it or worry about it, to be honest. As long as you have a lot in them, or a lot of buying power will help.
So if you got to the position where you're at 50%, you would maybe not do one of the trades you would normally do just to keep your account at that level?
If you're a member, probably yes. If you're me, I'm trying to give trades constantly. So that's why I made my trading plan with a set schedule where pretty sure in most or all conditions, not all, but most conditions, I'll be able to offer trades every time. Sometimes I go a bit above the 50%, but I'll look at it carefully. And you can also close out positions. You could buy options to help with the net, help with your buying power as well. All right, that's going to be the time for the last question. So if you have any other questions, feel free to let me know in the Discord. You could one-on-one chat with me or ask the group. You know, helps out everybody when you're talking amongst each other. So sometimes it might be a silly question that you're not willing to ask the group, but other people might be thinking the exact same thing anyway. So feel free to ask the group. You know, we're not gonna harm each other and say nasty things, right? We're all in this together to learn. But if you still feel uncomfortable, send me a one-on-one message on it. All right, everybody. It was great talking to you guys, and have a good rest of the evening.
Thank you very much.
Thank you. Have a good evening.
Thanks, guys.
Thanks.
Have a good day.
Thanks, Lance.
No problem. Have a good one.